Your market news now. ArcelorMittal South African shares fell more than 20% after the company said it plans to close its long steel operations due to weak demand and persistent infrastructure problems, potentially impacting 3,500 jobs. Its long steel unit produces fencing material, rail, rods and bars that are used in the construction, mining and manufacturing sectors. Meanwhile, industrial conglomerate Bidvest released its update for the 4 months to October, reporting that revenue growth slowed as activity off a high base was diluted by contracting durable consumer spend, volume reduction in some sectors, and increased price competitiveness. That share price is down 8%. To give us perspective on the markets, we are joined by Makwe Masilela from Makwe Fund Managers. Makwe, thank you so much for your time. Your sense on market sentiment right now, especially as investors are looking for some kind of catalyst to drive markets.
So far markets have been doing okay on the expectations that the data that's been coming through is kind of confirming that we are done with the interest rate hikes. But today we can see that we are more subdued, and that's ahead of that key inflation data to be released on Thursday from the US, and also some inflation numbers coming off to European Union, and not forgetting the PMI numbers coming out of China on Friday, and also our PPI on Thursday, then PMI on Friday. But the comment that we got yesterday from the European Central Bank, I think, is what is causing the market to be subdued, that this is not the time to celebrate. We don't have to be victorious. They just have to start looking into all the aspects that might be affecting inflation. That itself is more of a confirmation that don't expect cuts anytime soon, and interest rates could stay high for much longer than we anticipated.
You look at the Stock Exchange news service this morning, and a lot of the news dominated by mining companies. We've got the terrible news coming out of Impala Platinum with that share price down 6.8%, but also ArcelorMittal, because at one point that share was down just over 27%. What do you make of the sector, given that it's been, dealing with a lot of challenges, at least over the past 18 months?
When we look into the steel sector, we know that it's been struggling because of the economies which were not growing, and we started seeing the effects, during COVID, because there was no demand out there, but also not forgetting the high input cost, and also the high cost of doing business, especially per here. And the obvious one that we all know about is the likes of load shedding, and we know that companies like that, lose lots of electricity. And unfortunately, with Impala Platinum, that's not good news at all. I mean, this year already we had 52 people being killed, in accidents in our mines. Last year we had 44. And these guys, they always tell us that our most important asset continues to be our workers. They continue to tell us that the safety is the number one issue for them. But we get worried when we see people like that. I mean, this number of people dying, this cannot be acceptable. And I think I agree with the president of AMCU that definitely commission after commission is not helping. We just have to get our heads dirty and get the job done to make sure that those people who are mining those important resources get to be safe. Remember, these guys are the ones who helped us, that we had to collect better, taxes, because when they were doing okay, those companies paid lots of taxes.
Right. We've come we're close to the end of the year. We're almost at that point where we're wrapping up the month of November. But what do you make of 2023 if you had to look at the S&P 500's performance and the JSE?
I think so far the year, if we are allowed to take it month on month, because we have very good month, then we have very bad month. I mean, we've seen that November so far is very good for us. We see it's up almost 8%, and not just the JSE and the S&P. Even if you look into the global stock index, doing great, and all because of the expectations that interest rates are going to be going up further. The long and short is that the markets, unfortunately, for the better part of last year and this year, they've been driven mainly by the central bankers on the basis of the expectations, whether they will continue to increase or not. But as it is now, yes, we are happy, and we hope that this is not a dead cat bound, that is not just any other rally, that maybe it will continue even in December, and we get our Santa Claus rally, then definitely we'll have a better 2023. But if we happen to reverse this, as we've seen with the other month, that you get a nice month, then the following month it gets to be terrible, then definitely we might end the year more on flattish or just marginally up.
With that said, then, what are you taking comfort from in this particular market, outside of the fact that we have these rate cut expectations?
I think gold for me continues to be a very safe bet. You mentioned as well in your intro that the likes of Pitfest are complaining about all these things going down, margins dropping, volumes not being okay, and especially when it comes to the consumer-faced activities. I'm mentioning that to say that most developed economies, more than 60% of the economies, are driven by consumer demand. And now, if we say that consumers are not doing that great, chances are the economies might be at the point that, as much as we've seen some resilience with all these interest rate hikes, but probably the economies are tired, cannot resist much longer going forward, and also to cut against the fact that people are now expecting soft landing, but should it happen that we are wrong and maybe we get a recession, then we are safe on that end as well.
So in this environment, as we wrap up, how are you positioning your portfolios?
You still need to be more defensive where you can, and not forgetting to get the likes of your bonds. And you have been seeing that the yields have been going up. Now lately they've just started to go down. But people need to remember that if it goes down, does not necessarily mean that it's not even better than what we're getting for inflation. So as long as your money continues to grow, and the easiest way to check that is that it has managed to grow more than inflation, then at least you are better off.
All right, Makwe, let's leave it there. Thank you so much for your time. That is Makwe Masilela from Makwe Fund Managers, and looking at the share price performance of both ArcelorMittal and Implats. ArcelorMittal down 7%, but Implats also falling at around about the same, just down 7%. And the CEO mentioning that it is their worst incident since 1974, when they did have 13 miners die in one incident at the tailings dam. But key interesting fact here when it comes to those numbers. In 2003, the mining sector recording 270 deaths, and in 1980, a total of 800 deaths all in 1 year. However, we will keep monitoring the share price movements of those particular companies. However, let's leave it there.